expectations of any this announcement about the taper cut or reduction, given that the jobs number still is a bit of a potential issue, but that's still a week or so away. So I'll say 3 key bits of data coming up in the next 10 minutes or so. Vicky, hi my friend, hope you're well. Samuel, we need what? We need more information, Samuel. What more information do you want, my friend? Please stick it in. Let's have a look at, let's get rid of me for a minute. Let's move me down. Let's bring in the charts. So gold, been a bit, where's my gold chart? Got everything here. So gold. Why have I not gold down here? I thought I was very well prepared today. I had all on this workstation here. I had everything set up and I haven't got a gold chart. Let me just find it. It's okay. Let's have a look. So where's my gold gone? Energies. It's okay. It's all right. There we are. Gold. Futures. All right. So let's just stick that template on. What we're going to do? Let's do this one. Right. So let me just put in my period separator. There we are. So let's go back to the daily chart. So there's no lines on here. 1800 has been key. We've been pivoting through 1800. Big psychological number here. There we are. It's a bit shy of 1800, but this is the daily chart. See, we've been pivoting through this area. Big weekday today, Vicky. I don't know what's caused that. We've got a bid on the dollar. Certainly, if we look at the there we go, the dollar index that we saw earlier. So dollar's had a good day today. Obviously, gold. What's that gold chart now? Where's it gone? There it is. Is going in the opposite direction, as you might expect. The data's not out yet, so it's unless somebody knows something we don't know. So gold's sold off very aggressively today, rejecting 1800. This is the 1 hour time frame, so that's just broken. It's also broken under our weekly low here, 1785. 17. If we got the daily chart, you see how that 1785 area was holding over the last 5 or 6 trading days. So it's been tested once, twice, 3, 4 times. We moved up into the 200 day moving average. Couldn't break over 1800 and then went to 1805. Couldn't break that. Tested it Tuesday, rejected it yesterday, and now we've sold off really aggressively today, breaking this previous support through 1785. So that's a significant move down so far today. Obviously, that daily candle today, we can't make any decisions on it as an end-of-day trader because that's not complete. But certainly the 1 hour trader would have went short yesterday afternoon if he's been trading. There we go. If we're looking at this strategy here, we're under the 1 hour 200 period moving average on a significant candle yesterday at 1600 hours. So we're down into close yesterday at 1793, back under 1800 from the level we'd been at most of the day, over 1800. Had a wee bit of a rally in the early Asian session, and then we just moved down and down and down, and a very significant move on the European Open, breaking this low from Tuesday, and down we've gone again today. So where are we going from here? That's obviously the next question. So 4 hour is weak, and the dailies, we've seen a big day candle down. So where's the next support here? We currently trade at 1767. So where are we going from here? Well, the next day support here at this is the next level down, which sits as another round number at 1750. So 1750 comes into play now as we've sold off today. Regardless of where today's candle ends, that will, even if it move back up, we'll still have a great big wick on the downside, won't we? So 1750 is now in play. 1785, we need to recover back over that today if this support is going to hold, because we can't decide yet. But certainly next support below where we are now at 1768 is 1750. Vicky, I don't know how you're playing this, if you're short, if you're long, or however you're playing this. My friend, no, that's not. I can't see my friends on here. Okay, so right, let me just bring it in my calendar to make sure it's up to date. Thursday. So Ms. Lagarde's speech earlier, so I missed that earlier. Not a great deal of new information. In fact, there was no new information from Ms. Lagarde. She's very bullish about the European economy or the recovery of the EU. So Uncannily so, to be honest. But whether she was just trying to talk that up or not, again, as you say, time will tell. Earlier in the day, we'd had really good GDP numbers from New Zealand, a big beat at 2.8% compared to 1.1%, and much better than last time as well. And then more significantly, there was a big miss for Australian jobs numbers this morning as well. 146,000 loss of no jobs created. Obviously, the lockdowns continue to bite in Australia. Australia's ramped up its vaccination rate very quickly. 56% now of Australians have had at least their first dose. And the Prime Minister this morning was very bullish about getting to the key 70% of first dose and 80% for double vaccinations quite quickly. Remember, Australia moving into their summertime. So coming out of that quite potentially quite well, but a big miss for Australian jobs. And the Australian dollar itself is very much under pressure. So we've got a couple of minutes or a minute or so to go to the data. Retail sales, the one I'm looking at is the core number. See where that comes out. Minus 1.1% fall in retail sales last month. Less than 1%, 0.8 of 1% is expected this month for August. And taking out the cars, the ex-autos, minus 0.2 of 1%. And the control group, minus 0.1 of 1%. So better than last time. It was a whole 1% loss last time. So see how that comes. I say initial claims has come in at 332,000. So I've said this many weeks over the pandemic, but the initial weekly claims once again misses expectations. 310,000 last week has been upgraded to 312,000. It's not a big move, but it's worse than it was on the initial claims. And the 325,000 has come in at 332,000 for the initial claims. The 4-week average, though, again, see, so the trend remains very much to the downside. We're down to 335,000 now, the 4-week average, and the continuing claims. I haven't got the number here. Let me just show. Let's check what that is, because that's really the number that sits in the background, the long-term claims. So let's have a look. Yeah, 2.66 million. So for the first time in many weeks, the continuing numbers actually moved down quite significantly as well. It's coming at 2.66 million from 2.85 million. So that's a very significant, I've said significant. It's a very significant move down for the long-term unemployment number. So 2.66 million. That's a positive number. That should be positive for the dollar. And that's going to probably put more pressure on this gold chart we're looking at here. You can see gold now at 1764 on its low of the day and moving down. Dollar index, one would expect, will have moved higher. Indeed, it has. We're at 192.78. Not sure what that 50% Fibonacci level is. Let's check what that fib level is. That's that move down here. That move down we had in August into early September. So that fib level on the daily time frame that sits there. Let's just go back to the 1 hour and see that. This level here at 92.85. That's an end of day one. That's a key resistance level. It's 50% of the decline we saw at the beginning of August into September. End of August into September, I should say. 792.80 for dollar index. So it's a dollar positive data dump. So for the first time in a long time, continuing claims long term have come down. Initial claims missed, but not by that much. But they've missed again on a weekly basis. So it's a dollar positive data today so far. Add that to the weaker than expected CPI number we had on Tuesday from the US as well. And so it's been quite a good week for US data thus far. Samuel, not quite sure what you mean. We need more information. More information about what, my friend? Dr. Sand, good evening. Hope you're well. Staying safe. Anything you want to have a look at? Any asset you want me to talk about? Let me know. Can I see my friends on Facebook? I don't think I can. Any Facebook friends here? Okay. Somebody will let me know, I'm sure, if there is anybody. Right, so dollar index bid for the day. Euro down for the day, as you might expect, under 118. This is the daily time frame again. So the 1 hour continues to decline. So another one that's been, let me zoom that in. Another one that's trending really nice day today. If you're a trend following trader, that's 1, 2, 3, 4, 5, 6, 7, 8 continuous hour candles to the downside. The moving averages looping over, rejected that 200. Look at that, it's classic moving average movement here. We couldn't break over the 200 hour here. All of the Asian session, we tested it once, twice, 3, 4, 5. Eventually, the wall held 6 hours, banging into it, didn't break. We turned around here just on the early part of the European session, the 6 till 7 candle on our platform here. So before London's really open, London's open, Frankfurt's open, and we've moved lower. We've tested 1800. We've breached 1800 here in the early European trades. And down we go, down we go, down we go, and it's continuing to unwind. So if you look to the left, we can see here Thursday, we're way below Wednesday's low, we're way below Tuesday's low. Monday's low is here, we just breached that as well. So we're pushing new week lows here at 117.54. So 117.50 now becomes our key support area. So good retail sales for the United States and dollar moving quite nicely. On that. What's the way forward for gold, says Desiree? Well, the way forward, again, depends on your time scales, but let's just go back to what we were looking at. Where's my gold chart gone? I've lost my gold chart again. Let me just minimize that. It's because it's here. Where's gold? There it is. So, gold chart. Desiree, my friend, it depends on your time frame, obviously. We've been channeling sideways, and, lots of traders will be waiting for this level. We test, see here, this 1785. So these days here, so 1, 2, 3, 4, 5 days out of the last 6, we've tested down to 1785 and it's held. We've closed each of those days higher. So that's you would argue, or you could easily argue, that the close of the daily candles was higher, $4 higher at 1788. So it looked like we were biased higher. But remember, we had this big sell-off last week here on the 7th. That was that Tuesday sell-off, wasn't it? A huge move down, rejecting 1830. A big down day on that Tuesday. Was it Tuesday or Friday? I can't remember now. It's Tuesday, wasn't it? Yeah, that's it. Under the 200-day moving average. And so that then tested this 1785. We recovered here on this Tuesday just gone, day before yesterday, but we couldn't break over the 200-day moving average again. So again, that's a bit of a heads up, right? So again, in the same day, we tested down to this 1784.5 area support. Yesterday, declined from that 200-day moving average, moved down. No indication that what was going to happen today has happened, but something's happened. The dollar's bid, the data that's just come in has been dollar positive, and gold has weakened again, and we're through here and now 1750, or that's 1752 to be more accurate, is that area here, taking us back to the 13th, 12th and the 11th of August. That's little cluster there at 1752. So we're currently trading at 1763. So next support is there, and then the next support would be the close of the daily low for August, which brought us down here to 1728. So they're the next levels down, okay, on an end of day basis. Intraday, just follow the trend, my friend. Get on the wave and surf the wave into the beach until you get a bit grounded. At the moment, those moving averages are moving down aggressively here on the 4 hour, and the 1 hour is even more aggressive as we move down. So first indication was that move yesterday afternoon into close. You could have taken it out there. That would have taken you out. You could have closed your short position and then gone short again here as it's turned around, rejecting the 20-hour moving average in the middle of the Bollinger Band. It also then a couple of candles later put in a fractal high as it's moved down, and then the significant move today, or the initial significant move, was here at the 7 till 8 o'clock candle here, breaking the low of yesterday and a bigger bodied candle, and then we followed through, and then another one here at 12 till 1, and another one in the last hour, and another one in the current hour. So the momentum downside is gaining. You can't really tell here with the RSI. I haven't got MACD on here, but you can see the RSI, let's have a look, is significantly oversold, you would argue, traditional RSI 14. It's all the way down at 13. So you would expect some sort of buying perhaps down here. When we get to 1760, who knows? But that's continuing to decline. But as you can see, the RSI can continue to decline. If we just add a, let me just add a, you can't see that because it's behind my head, isn't it? I've just realised. If I add a MACD, you'll see the MACD actually. Let me just insert the MACD. You'll see it's just as a good indicator. There we go. So standard default setting for the MACD. That should, see, that's actually gone the wrong way. It's moved up the RSI. So you can see the RSI now, and I've put the MACD. And you can see the RSI still trending lower, into the oversold area, and still moving down. 13 is very oversold. Doesn't mean it's going to go up. The momentum is still moving down, but will it get to 1760? Fancy spot. But that's the data in on the day. So we're down. Desire, sorry. 15 minutes. So if this is the 1 hour time frame, okay, it's down. The 4 hour time frame is very much down. So the 15-minute time frame might already have turned around. Well, it hasn't, has it? 15-minute here, my friend, trending lower, and just stay on that surfboard. We're under the 20 period moving average. We're under the yellow line now, which is the 9 period moving average, and we're under the 5 period moving average. That is a lovely trend following trade to be on. The moving averages are aligned. We've got 20, 9, and 5 all in alignment, and they're all nicely, they're not crossing, they're not jiggling about. The trend moves down. We've gone down, consolidated, down significantly there, consolidate a wee bit, down, significantly, consolidate, retrace a wee bit, but down. So we've had here 1, 2, 3, 4, 5, 6, 7 or 8 consecutive down candles. Don't try and catch the bottom of this. Don't try and catch a falling knife, as they say. The trend can go on and on. As you can see, the higher time frames are down. We just see the 4 hour, the 1 hour, both down. 15-minute continues to decline. There will be a fallout, but as we say, it's really significantly oversold here, you would argue. 7.7 for the RSI. The MACD is very extended, huge. You can't see that because of my head here. If I get rid of me, you don't hear me, I don't think. But as you can see here, you can see the histograms are getting longer. And we're moving, but the ATR also here is $3 now for a 15-minute. Can you see this 3? So you see where the ATR says 3. So the momentum, as you can see, is increasing as the candles increase to the downside. Okay, Curtie, that's very good. MHB, hello, my friend. I haven't seen you for a long time. Good afternoon, or good evening, good morning. I don't know where you are in the world. I can't see anything. Facebook friends. All right, okay. Somebody's going to come and fix it for me. But anyway, yeah. So gold, 15-minute, Desiree. It's moving down. I hope that's made sense. I see a Facebook friend. Curtie, hello. Facebook, I can see it now. Very good. Anything you want to talk about? Let me know. We'll have a look at it. So. Dollar has had a good day. Let's have a look at some of the others. The Aussie dollar, as we said earlier, big miss for the jobs numbers this morning. Some big political news for Australia this morning as well. They've gone into a pact with the UK and the United States to build nuclear-powered submarines to be based in Australia using American technology. It's the first time the Americans have let their submarine technology out of the US, apart from the United Kingdom. It's upset the French because they had the Australians had signed a contract with the French about 5-6 years ago to make electric-powered submarines. Anyway, that's a bit of a political story. It hasn't really affected the Aussie dollar. The Aussie dollar remains relatively weak there. This is the daily time frame. We come down the time frames. This is the 4 hour. As you can see, weakening for most of September. We've got this high here at 74.60. We've been down last couple of weeks, and the 1 hour a week day today, breaking lower, and we're testing lower again right onto the next low here at 73. That's not actually on there. So Aussie dollar under pressure to the downside. Desire, not a problem, my friend. That's what we're here for. it can help. Okay, so Aussie down. Obviously, the repercussions. New Zealand are not involved in the deal. They're not going to allow those nuclear submarines in their waters. So the Kiwi also under pressure. And the big mover today has been the yen and the Swiss franc. The Swiss franc in particular is under pressure today. Again, no particular news, but when the Swiss franc moves and the yen moves, it's usually not usually, potentially, shall we say? I'm not allowed to say usually. Potentially, it could be the Swiss National Bank themselves playing silly buggers. They think the Swiss franc might have got too strong. So, middle of the month, as you can see here, this is the Swiss against the dollar today. Big, strong day for the dollar, and no more so against the Swiss franc here, moving up quite aggressively to new week highs as well here through there at 92.36. Lots of people are still reluctant to trade the Swiss franc, given what happened in 2015. But yeah, it moves around, it trends as well as any other asset. So don't be afraid to trade the Swiss franc, my friends. Equity markets, say, have sold off earlier in the week. They had a bounce yesterday. Nasdaq here. Let's go back to the daily. This is the Nasdaq up here at 15,700 earlier in the week. We finally, I'm saying finally because it was the last one to move under. This is the futures market, the USA 100. Finally, on Tuesday, finally breached that 20-day moving average, having moved down quite aggressively. So for one day, the Nasdaq was under its 20-day moving average for the first time since the since the end of that dip we had in the middle of August. And every time, if we zoom this in, you can see every time we dipped under here, the 21 EMA or the 20 moving average here, the middle of the Bollinger Band, it's been bought during this summer rally. So is that going to continue? Who knows? September is notoriously, as I said at the beginning, notoriously volatile for equity markets, and that's proven the case at this month as well. And we're coming to the end of the first 2 weeks. The volatility, when we break it down into a weekly basis over the years, is even more so in weeks 3 and 4 for September. So there may be some more shenanigans, some more fun and games coming on. But that 20-day moving average has held again. Yesterday we rallied again. We had some big sell-offs earlier in the week. I don't know if you follow me on Facebook. We had some big moves in the big tech companies. We had Microsoft moving down, Facebook. More importantly, Apple, the world's biggest company, shed 3.3% on Friday after a court ruling for Epic Games, the makers of Fortnite. It was a bit of a mixed ruling, and Epic have gone back to the appeals court in the United States to try and push it even harder. So Apple's had a weak week, had a poor reception of its new iPhones, earbuds, and although the iPads come out quite well, apparently. It was really a disappointing iPhone 13 launch, but over the last 20 or 30 years, betting against Apple has not been a successful occupation. So Apple shares moving down 145, and they bounced again yesterday. So Nasdaq was up again yesterday. White candle here for the first time in 7 trading sessions. So you see these 1, 2, 3, 4, 5, 6 trading sessions to the downside. First time up day yesterday, back over the 20-day moving average, but becomes key. So this 1545, 15400, 54 area, absolutely key now for the direction into the rest of the month. Remember also, the next 2 weeks brings us into the end of quarter 3, the start of the key quarter 4 as well. So a lot of balancing up going on. Labor Day is behind us. And volumes are back significantly, and see where things go from here. That's the Nasdaq. More important, S&P 500 had been under its 20-day moving average for 1, 2, 3, 4 into our 5th day, and it's still under there. So Nasdaq continues to be the best performing of the major indices in the United States. The USA 500, 1, 2, 3, 4, 5 days under the 20-day moving average from that top here at 4,550. So again, consolidating over there, but to get back into this upper half of the Bollinger Band, we now need to breach 4,495, and we currently trade at 4,466. And finally, the USA 30, the industrial complex, that's the one that's been hit the hardest. So we topped out here at the beginning of August, and again we tested that to those highs at 35,500 at the beginning of September. But the USA 30 here, let me just get that. There you go. So you see this is now 1, 2, 3, 4, 5, 6, 7, 8 days now under that key 20-day moving average. And here, more importantly, the Bollinger Bands here. I don't even see. I hope you can see that. You can see how the Bollinger Bands now are getting wide. It's getting pushed down. I don't know if you can see that. So how it's starting to widen. The bill of the beak of the Bollinger Band now is starting to widen, and that bottom lower Bollinger Band is starting to drop down. So, lots of techies, analysts looking at that. So where's the next support for the Dow? Well, really, the big support was that big move down there at 33,900. So under 34,000 is next clear support in end of day terms. These big candles here. So there could be a bigger shakeout, more of a shakeout. Who knows? But the Dow is leading the move lower. The Nasdaq is only just moved under its 20-day. It's moved back over its 20-day in yesterday. So we'll see where we go. Neem, good afternoon. Cable, you request. So let's have a look. Pound, big political news yesterday in the United Kingdom. The Prime Minister Johnson shaking up his cabinet. The Foreign Secretary lost his job, got demoted. Big shake-up. Again, politics there. Remember, politics is very much in the not just the background, but the foreground for September. We've got we'll have a new chancellor in Germany, elections in Canada, and there was somewhere else. Well, I can't remember where it was. Canada, Germany, somewhere else. Oh, and obviously Japan. Japan with a new prime minister as well during September as well. Suga's leaving. So obviously, new guys, potentially new guys in new seats. Certainly in Japan and China, it's unlikely that Trudeau will lose his majority in Canada, but he wanted to improve his majority. And it doesn't look like that's going to happen. But anyway, big political shake-up in the United Kingdom yesterday. So sterling down. We got a strong dollar on that. Look at that candle there. This current one. Where are we? Is it nearly 50? It's still 10 minutes to go. But that's been a right old shakeout. Drifting lower most of the day. Seemed to have penetrated through the 200-hour moving average. Found a floor at 138.13 and 138 itself. Again, this is a key Fibonacci level. I don't know where that's come from. Let's have a look where that Fibonacci level. So that's a 60. Whoa, what's that? So it's an extension of a move up. That's a level. It's a bit of a messy one, that. But yeah, 138. Let's zoom back up. 138 is the support where we've run down to today, and we're currently at 138.02. So we're about to push to under 138 by looks. I think that's moving quite aggressive. That's a huge candle. Remember when we talk about understanding candle patterns, we can't analyze anything till it's done. But 10 minutes or 9 minutes to go, that's a huge candle, isn't it? It's unlikely to turn around. You wait till it's completed. But look what's happened. It's taken out the previous 1, 2, 3, 4, 5, 6, 7, 8, 9 hours worth of action, whether it's up or down, has been completely wiped out by this 1 hour. This is it's a huge candle. Moving lower, testing the 138 level. So you look to the left. Where's the next support for cable? Well, it came here yesterday when we went to 137.96, and we're within smidges of that, aren't we? We've got to 130. We broke 138, 137.99. It's already gone. So, Neem, I don't know what time frame you're trading, but it's a wee bit messy cable. Tried to move up. Where are we? That was yesterday. But that's your new line there, 137.95. Intra hour that went to 137.91 as well. So that probably looking to get tested today. MACD is now under as you can see here, under the zero line. It has been all day, so it's moving down. Stochastics looked like we were trying to rally back up from an oversold area, but again, that's moved down in this huge hour. RSI was trending, moving out, so it's a big flip. We might have had some negative sterling news as well as the positive dollar news this hour, but certainly RSI looks like that's moving at 133, moved down very aggressively. Hope you got the right side of that move, Neem. You might have been caught out depending which way, how you're trading it, but the 1 hour's certainly down. The 4 hour has flipped as well in this current hour. When has that started? Yeah. Excuse me. So here up in the higher time frame, the 4 hour candles topped out yesterday or this morning at 138. We've been down, and then the current one is down. And more importantly, the current one is breaking the 200 period moving average on the 4 hour time frame. So 138 becomes key. Here for 4 hour traders, the next spike lower is at 137.91. So that's that time we were talking about before earlier in the week. Below that, you can see we move further back, and here, when was this? That takes us back to the 9th of the 9th and 137.55. So that's the next support. If the 137, the 138 area. The candle breaks below that and holds under that to the downside. Okay, so it's boosting there. That Telegram channel. Okay, so cable weak. 4 hours down. The 1 hour we just had a look at down. We go back to the daily candles. Really, the daily time frame is still very much sort of sideways. Actually, we zoom up a bit here, but you can see, just like we were looking at that gold chart, the 138 level is providing support on an end of day basis. A breach of that takes us back to this one we just talked about there on the 4 hour, that 9th of September, where we went down to 137.50. So 50 pip move lower there, but really, as you can see on the daily time, it's very much sort of a sideways action, isn't it? Sort of channel bound. Doesn't really want to go any higher. Capped at, really, it was there, 138.50, but the last few days we haven't been able to close over 138.40. So 138.40 to the upside. 138 itself, on a 40 pip range is quite narrow for cable on an end of day basis. Swiss we looked at. CAD's been very much in focus as well, but again another one relatively range bound here in this second end of last week and beginning of this week. We can't get over 127. This is the dollar CAD on the daily basis. So 1, 2, 3, 4, 5, 6 days testing 127. Doesn't want to close above that. Rejected it again yesterday. We had another down day yesterday, bigger than the up days we'd had earlier in the week. So we closed below yesterday. Closing price for dollar CAD was 1, 2, 3, 4, 5, a 5-day low. We've bounced off that at the moment, 126.23, but not nowhere near the 127 level or 126.45 at the moment. So inventories yesterday were a. Still remember there were quite significant miss if I remember looking at them just before I left. So it was a significant drawdown yesterday. So yeah, 6.5 million barrels from the 1.5 million barrels we had drawn down previous week. So oil continues to rally. 72.50 was our high earlier today. So oil remains very much on the bid, and that $75 handle is very much in sight now. 72 is a key level. You see it nicely on this Fibonacci level here. That's that extension level, the 161.8 extension level, sitting right on $72. We had a very big lift for the price yesterday with that huge big drawdown and 72 is now a bit of a support level here so far today, and we're currently trading around about that $72 level. But we've got the daily time frame. See what a strong week we've had, or a week and a bit we've had. We went down all the way down to 67.25, but we've had 1, 2, 3, 4 strong consecutive days bid for the oil price, and now we've reached that 672 level. Then the further extension on the Fibonacci takes us to the big psychological $75 a barrel, where many analysts have the average price for the second half of 2021 to average at 75. Well, we'll get to that. Time will tell, but certainly oil's bid so far. Kareem, Monday. Hello, my friend. I'm sure you haven't actually asked for anything, my friend. I can't see what you're asking for. What you invested in? Tate Walls. What's good, man? I don't know. Are you talking to each other or are you talking to me? I don't know. It's not a question there, but is it too late to short gold? I don't know what you mean. Compared to what, mon dear? Is it too late to short gold? Short gold? Well, as we saw, where's gold gone? It's where are we? This is gold, wasn't it? Gold, 50 minutes. It's running. The trend is running. So you're saying, is it too late to get in? Well, it's depending on how long you're going to hold it for. Where's, whatever your strategy should be, Monday. Don't just jump in just because you see a trend running. You should have an entry point, an exit point. How long you're going to hold it for? Obviously risk management is absolutely key. Where your stop loss is. But if look, let's just go back. So this particular setup here would have triggered short on this particular time frame, on this 1 hour time frame. The key short would have been here yesterday, okay? On that big candle there. As it's broken, the 5 and the 9 EMA have crossed, and we're under the mid. In fact, it's not this. In fact, it's there. It's earlier. So that would have been your initial short yesterday at 9 o'clock. So this has been biased lower. Gold price here for this setup, this particular setup, has been biased lower since 9 o'clock yesterday. So are you saying? Well, yes. I'm not saying getting now because the trend has run. Is it going to keep running? Well, it's still running. So nothing is suggesting a turnaround is what we're saying, aren't we? If we go all the way down to the lower time frames, the 5 minute may have retraced a wee bit, but it won't have done much, as we saw. So that's the 1 hour's down. The 30 minute continues down. 15 minute is still down. We've got consecutive red candles. And the other thing that people get really hung up about is, well, it can't plot another red candle because it's done 10 or 9 in a row. Well, yes, it can. Things run and run. Things can go on a much longer than we anticipate. Usually much longer than your account can cope with sometimes, is the old adage they say in trading. So that trend is running 15 minute. Is the 5 minute showing any signs of running out of steam? Well, not really. There we go. The 5 minute. There we go. He's been on. That's that went short off the screen. He's been under the 20 period moving average here on the 5 minute chart off the screen. We'd have to zoom right in to see when it was last over the. Look at that. So even as a 5 minute trader, even as a 5 minute trader, i.e. you're trading 5 minute time frames, we've been under the 20 period moving average since 11:10 this morning, since 10 past 11 this morning. So that has been consecutively weak for what is now 58 candles. So my question to you, traders out there, have you the patience and the discipline to hang on to something for 58 candles? As a 5 minute trader, that's as difficult as an end of day trader. That's somebody holding a trade for 58 days. So 58 candles. But look at the size of the candles in those 58 candles. The biggest movement, the most negative movement, you're short already. The most positive movement to your direction has been in the last few candles. So if we go back just 5 or 6 candles, that's a huge candle down, isn't it? And the current 5 minute candle is quite big as well. Where are we? That's halfway through. But where are we now? Well, we're getting to that 1760 level. Is that a support area on other charts? Well, we don't know. When we looked at the higher time frame earlier, remember, we talked about 1750 on an end of day basis being a big time frame. It's still $10 away. It's an awful long way to get to that. So as an intraday, this will obviously run out of steam at some point. But even here on the 5-minute candles, we've had, 20 minutes ago, we had 3 candles not going down. We went sideways a bit, but we didn't go up very much, did we? We then burst lower again, didn't we, 10 minutes ago? And now we're moving lower again in this current candle. So the trend remains set. And even the 1 minute candle, he's been short, closed it out. He went short again here at 8 minutes ago. Short, out there. He still made money, and then he's gone short again here at 1 minute past 6. 1 minute past 6. 1 minute past 1600 out. So the 1 minute trader is also short. And here now we are under 1760. So 1759.89. We've breached 1760 for now, but the trend continues to move. If you look at your, interestingly, here on at the 1 minute time frame, the 1 minute time frame, the RSI level, the only indicator I've got on this chart, other than the Bollinger Band, which has kept me short because we're in the under half of the Bollinger Band, is at 33. So we're not even oversold yet on the 1 minute time frame. So that big move down, the retrace, didn't break the 20 period moving average, and we've gone short, and it's gone short, and we're moving down still. So the trend is moving down, mon dear. I'm not saying buy it or sell it, but the trend is very much still in play on all those time frames you've looked at. Okay, but that's with this particular setup. If you're an oscillator trader, you've been moved out. So you don't necessarily need to know what's caused it, what news has caused it. That is just a trend, and that's running. And when they run, as I say, they run for a while. So let's say we go back to the daily time frame. You see the size of the candle. Thursday sell-off, 1760. That 1752 is that level we talked about earlier in the session, didn't we? So there we go. Gold moving lower, dollar bid, and Swiss franc sold quite aggressively. So I haven't looked at the yen yet today. Dollar yen, interestingly, still very much sideways action here on the daily time frame. We're under 109.50. Interestingly, we'd had 2 days down earlier in the week. You can see these 2 days. We go down to 4 hour, and we've bounced today or yesterday as well at 109.25, and again big strong candle, that 12 till 1600 candle today for the yen dollar. So dollar's had a very good second half of today so far. Good. I'm glad it's an eye opener, friends. As with all approaches to trading, you need a strategy, you need a system. Follow the system. Accept you're losing trades. Most people can't do that, and that's why most people end up quitting or blowing their accounts and walking away thinking they can't do it. Anybody can trade. It's a matter of understanding yourself first and foremost. So, and having a system and having a strategy that fits you and fits your time frame. So, dollar yen off 109.25 this morning. Today we're back to 109.70, but still in the under half of the Bollinger Band. That's a 4-hour one. Intraday might have picked up a bit more. There we go. Stretching. So next resistance for dollar yen traders is 109.77, where the 200-hour moving average sits. We've burst out of our Bollinger Band there. So again, really good example of the volatility picking up and therefore bursting this sideways action we'd had on the Bollinger Band. So we'd moved down, we pinched. See the pinch point here on the Bollinger Band? This nip in, this squeeze. That's something's going to happen, and we did. We legged down again after the squeeze. Then we went sideways. We found support at 109.25. We went sideways into the close yesterday, most of this morning, and then again, strong data for the US, the jobs claims, the retail sales data, and the Philly Fed. I actually didn't see the Philly Fed number, but the jobs, certainly the retail sales was strong enough to. Why haven't I got the Philly Fed on here? Why haven't I got the Philly Fed? Right, let me just show my filters. Oh, stop it then. So why isn't it on this calendar? Philly Fed, yeah, Philly Fed was much better as well. Came in at 30 compared to 19.4 last time. So 3 big ticks in the box for US economy today. Big beat for retail sales, both the core and the headline number. Initial claims were a bit weaker than expected, again, but the big tick for me was the continuing claims were better. 2.66 million. So that long term is starting to breach down, starting to move down. 120,000 moved down from 2.78 million to 2.66 million. It's a big tick down in 1 week for the continuing claims. And the Philly Fed index, the Philadelphia, full name is the Philadelphia Manufacturing Index, at 30 is quite a leg up. The manufacturing index service can be quite volatile. The Empire State yesterday from New York was a big beat as well, but certainly that's a good one for Philadelphia as well. So we've jumped up there. So good day for the dollar, good day for dollar. Well, good day for the US economy today. So any more questions, ladies and gentlemen? So I'm running out of steam a bit. I've only been here 50 minutes, but let's have a look what else is going on in the world. We've had a look at the indexes. We've got still, obviously, 20 minutes before the cash markets open. And let's have a look at what's the S&P is doing. So we're a bit sideways, actually. We've drifted futures under. This is the 1 hour on the S&P 500. Nasdaq, again, drifting lower, interestingly. So it's weaker again from the rally we had yesterday. It's interesting, isn't it? Moving down, and the industrials, the USA 30 also drifting a tad lower. So stronger dollar, weaker equities at the moment. MHB, pound CAD. Let's have a look at pound CAD. I'll look at pound CAD. I wrote about this yesterday, didn't we? Because yesterday was really the day for pound CAD. We had both of them reporting. I thought I had sure I've got it here. I'm sure I've got it here. Have I not got it here? I haven't got it here. Pound Kiwi, pound Rand, pound. Let's just open it. Right, so file, new chart. Forex. What are we looking for? We're looking for the pound against the CAD. Any particular time frame? MHP, my friend. Anyway, let's just talk about what it in general, because yesterday we had this big spike for inflation for both economies. The Canadian CPI yesterday came in at 4.1%, a high not seen since 2003. Do your maths. That's an awful long time for inflation. But again, the central bankers around the world are saying it's only transitory, it's only temporary. The base effects will drop out from last year. All this massive spending, all this huge liquidity. But prices certainly going up for the average resident of most parts of the developed world, certainly. And yesterday, UK 2012, we had a 3.2% year-on-year inflation spike, the highest since 2012. So dollar CAD itself yesterday closed down. There we go. This is the daily time frame, so we closed down, but it's generally well bid. We've broken out of a bit of a range. There's the top of that. Let's put that in there. That range through here. If I just put in the time frame so you can see period. So there we go. So our top here for on an end of day basis for both July and August took us to 174.89, so 174.90. Psychologically, 175 was just a bit too of a push from this rally we'd had from May all the way down here at 168. So we'd rallied up through May, June, July. We went to just shy of 175. We did the same in August. We went sideways, and now here in early September, we've breached that previous high for July and September, and we've pushed above 175. It doesn't look like it wants to go much higher. 175.58, so 175.60. Two fractal highs here so far this month. and now we've rolled over in the last couple of days, but and back under that high from July and August. So that's down yesterday and down again today, pound CAD. MHP 1 day. So 1 day is what you're saying. Well, we have support. So we've rolled over from this high. So as you can see, let's just, again, the same story we just talked about before with gold and some of the other things. So we rallied, we spiked here to this 175.50, 175.58 for 1, 2, 3, 4, 5 days. Couldn't close over it. The wall held, and we moved down yesterday, rejecting it and moved down. Yesterday, we closed lower for the 1, 2, 3, for the 4th day. So that was a 4-day low yesterday. And then we've moved lower again today, and we're now at a 1, 2, 3, 4, 5, 6-day low. The next support is that resistance there at 174.30. So we sit at 174.45, 174.30, not many pips away, but that's the next support level. The key support for your as an end of day trader MHP is here at the 20-day moving average, the midpoint of the Bollinger Band, which sits at 174.08, so 8 pips above the big round 174 itself. So 174 is your big line in the sand as support as this moves down. If that breaches, you would then the next support breaks that 174, and you can see going back to the beginning of September, the end of August, we then moved to 173.30, and then below that was the low for August, which took us down 4 days in a row, no, not 4 days in a row, but 2 clumps of 2 days took us to 172.80, and that's where the 200-day moving average sits. So let's just go through that again. First support, we're at 174.45 today. Obviously, this candle isn't closed, but it's interestingly, today we've gone lower than we were yesterday. Looks like these 5 and a 9 may be crossing, but it hasn't yet. So 174.45. First support, 174 itself, big round number. Then we've got this low here for September at 173.36, and then the 200-day sits there at 172.80, 172.90. That low also coincides with the low for August to the downside. To the upside, this is going to turn around. Obviously, first resistance is yesterday's opening and at 175.23, and then that 6-day high where we rejected at 175.60. Okay, I hope that's answered your question. Ezzy is after the Swissy and the Euro Pound. Swissy, I don't know what time frame, Ezzy, my friend, but certainly it's having a right old run today. Where am I? I've got Swiss there, surprisingly. There's the Swiss, a very, very strong dollar and a weak Swiss franc. There's no question about that. That's well, we don't know yet, but that sort of move suggests the Swiss National Bank have been involved in it on a day like this. If we zoom in, let me just zoom in a bit. Sorry, not zoom in, I meant to zoom out. That's a huge move in our terms, isn't it? That's a very, very aggressive move, which suggests the Swiss Bank were involved. So we're moving, and where we're moving to from here. Well, we breached today. Let me just put in the time separators. So the high we've gone through today, and then resistance was at 92.40, which took us back to the 13th high here. When was the 13th? 13th was Monday, so a week high we've just gone through, and that took us back to the 8th as well. So we've breached that very significantly. We now trade at 92.67. So where's that suggesting we go from here? Well, on a daily basis, it's a very, very strong day. Look at the size of that candle. It's not unusually strong in the history of this pair, but it's certainly pushing high. And we've got a new. This is August. This is July. So our July high, intraday high, we're already testing again. Going back to June, we're So we're above that at the moment as well. And then we go back to May, we're way above that as well. And we need to go back. Let's zoom this in. Let's have a look. So where we are now, 92.70, or dot 92.70, we look to left further, and it takes us all the way back to the big down, or the beginning of the big down run at the beginning of April. So this huge downtrend we had here at the end of March, beginning of April, where we'd rallied to 94.35, and then we just collapsed all the way down. It's finally breaking out. So if we just put a little, so look what that Mr. Fibonacci is going to tell us. What does that tell us? Let's just do the extended move. So that Fibonacci level, that big leg there for April and May. And look where we are. Look, as if it's by magic. Don't you just love Fibonacci, traders? Look where we are today. Look at that. I think I'd made it up, wouldn't you? You just saw me do it. I didn't make it up at all. Didn't know that was going to come out there. But where are we stalling? We're stalling right on the key golden ratio, the 61.8 golden ratio at 92.70, which is exactly where we are today at the moment. So a breach of this level, having seen how we did with the 50% as well. We've gone through it, and a big day today. So you might expect a bit of a cool after this, or we rally through it. But certainly it's a key level where we've got to already today. As he you haven't said what time frame, but certainly that's a key level we're at the moment, going all the way back. Zoom that in again. Let me show you that again. Going all the way back from this decline we had during April and the first part of May. Huge leg up, having consolidated for most of the summer. But again, it needs to break over here if we're going to move higher. 92, 92.40. 92.30, what does that say? 92.36, 92.35, where all those fractal highs are consolidating. We've broken through that today. So key day today, see where we finish. But there's a key Fibonacci level. And above that, it's fresh air, isn't it? Because we moved down really significantly. So if we move down really significantly, guess what? We can move up really significantly if this breakout persists. And you could argue that is very positive, because look at these fractal highs. There's 1, 2, 3, 4, 5, 6 fractal highs during August. Well, even more. 1, 2, 3, 4, 5, 6, 7 fractal highs here during August and the first 2 weeks of September thus far for this pair. And this could be a breakout move. So key day today potentially for dollar yen, but the day isn't over. It's not dollar yen, dollar Swiss. The day isn't over, Ezzy. So I don't know how you're trading this, my friend, but that's a key move. And we've already done the move today, you would argue, having got to 92.70. Yeah, the bid's still on. Certainly a very, very strong day. We go back to the hour chart. Look at that. Very, very strong move. Already breached and ran from 50 to 90. Remember these Fibonacci levels here? These are daily levels, and we've done it in one day. So something certainly significant going on the weakness of the Swiss franc. You would interpret that. Next one was the euro pound. And again, I haven't seen that here. Let's just open another chart on this. Sometimes it's easier when we do these live. So we're doing a template. Let's put the same template on. So we talk about the same thing all the time. And again, let's put in my there we go. Again, I don't know what time frame you're trading. We've got the daily. It's been biased to the downside. Sterling has been bid most of 2021. Expectations of after the Brexit deal was signed. But anyway, we went to under 84.50. We're back to 86 towards the end of August. We've then turned around and moved down again. Sterling bid, euro down. So 85.25 is where we trade today. End of day triggered short here on a big candle on the 9th of September. Remained short to the downside. Quite some volatile trading there for the euro pound, but that's still short. Your stop loss probably around about where you got in now, I would guess. So that's moved down, but that's looking short to the downside. As you didn't say what time frames did you? So as we're biased lower, where's the next support? Well, let's put that in there. So where's that one? There we go. So the rally up here during August took us up quite aggressively. So the move down maybe similarly aggressively. Next support sits there at which we've already tested on Tuesday. We've tested again today at 85 itself. Yeah, that's 85 is a big line in the sand for euro pound trade. Let's just put this on this chart so you can see where it is. There we go. 85. Let's make that a bit bigger so you can see it. Make it a big fat line. There we are. And 85.0. So there we go. 85.85. Big support. We've tested it again today. That was an area that we were looking at in the middle of August. And then below that, if that is breached again, really that one-day candle here on the 12th of August took us all the way down to 84.50. So big 50 pip gap if 85 breaches for euro traders. But at the moment, we're obviously significantly above that 85.25. Intraday should be biased lower as well. Yeah, the 4 hour here, it's 200 period moving average sits at 85.50. 85.50 on the 4 hour, and again that would have triggered short here last night and then followed through this morning. It's moved down to 85 and it's bounced off there on 4 hour, but 4 hours still short on the 1 hour time frame. Last went short yesterday at 1600 hours, or the 1500 hours candle, having rejected the 200 hour moving average a few hours before. Quite volatile session yesterday, but ended up lower, and that went short. The 1 hour trader went short at 84.45. Bit of a retrace, and then followed through again this morning. That's that huge candle there this morning, 10 to 11, and 1, 2, 3, 4 consecutive hours lower, and now we've bounced from testing 85, and last two candles have been to the upside. So intraday, we need to break back over 85.28 if that 20 hour moving average is going to break to the upside. My friend Ade, I hope that's answered your question there. You didn't ask for a particular time frame, so I just ran through those together. Euro dollar, says Ade. From what we just said, you can gather that the euro, what's the euro here, is weak today simply because the dollar's strong, principally. But as we said earlier, I don't know if you were here earlier, Ade, classic little trend following move today. We couldn't break the 200 hour moving average here at 118.18 overnight. So zoom this up a bit. So we've got 1, 2, 3, 4, 5, 6 hours here testing the 200 hour. The wall held. Then it triggered lower here this morning at 6 till 7 here server time. And it's just trended lower ever since. So that's still moving lower. We're at 17.56. We've already tested 17.50. If you can see, yeah, you can see the MACD there. MACD, very, very strong histograms. The signal line being under zero, don't really tell you, but under zero, but trending lower. So continues to be weak. Again, where's the next support? So the 4 hour is also weak and moving lower, and we look to the left, and here we are at 17.50 is our support for the euro against the dollar. But it's a big day for the dollar. 17.45 on this 1 hour chart that's the 4 hour chart, has got support below 17.50 at 17.45. End of day basis though, significant move. And we just saw on the Swiss Franc, big, significant move down today, drifting lower earlier, having rejected the move up at the beginning of September, the test of 1900, moved down last week, consolidated a wee bit this week, bit of sideways action, but that 1800 has breached today quite significantly, and we're here 40 pips below that currently to the downside. So 17.45 is the 4 hour support. end of day basis is a bit higher at 1750. So that again moved down. The low we got to in August on an end of day basis took us down there to 1675. So 116.75. So again, this holds out today. We'll see what happens. Ezzy, no problem. Any more questions, guys? It's 4:30 server time. Markets are opening. Let's just have a look what's going on in the US Open. Just annoying. The news flow is obviously all about the retail sales. The jobs claims have lost in the fury of the very strong retail sales numbers. Philly, so I said before, Philly Fed was really good. So all added to that positivity for the dollar today. So euro down 17.45, 4-hour trader 17.50. End of day basis, but a big date for the dollar thus far as the 1 hour time frame. So moving lower. Okay, any final questions before I go? There isn't. Okay, so Friday tomorrow, a bit quieter tomorrow. We've obviously had all that inflation data this week. So big news from the UK and Canada earlier in the week. Tuesday, the Americans looked like CPI and missed expectations. So again, positive tick. The retail sales today, positive tick. Negative news for the Australian economy with regard to the jobs numbers. Vaccinations are picking up though in Australia, and so some of these very, very tight restrictions and lockdowns are in place may fall out. Cash markets are just opening. We're down a tick. We're down 6 on the S&P, 1 on the Russell, and see there on the Bloomberg screen. So that equity markets we were looking at earlier continue to weaken today. Tomorrow, as I say, we close the week 2 of September. It's the Europeans' turn to read out their final reading of CPI, see how that goes, and it's retail sales out of the UK tomorrow as well. And then finally, later on in the session, a key sentiment index, the Inflation and Consumer Sentiment Index from the University of Michigan. Quite a key number and very highly regarded University of Michigan Business School data tomorrow. At 1400 GMT, 5 o'clock server time. So that's the key data to come for the rest of the week. So take care, everyone. We'll see you all again next time. Week 3 of September is upon us. So MHP, thank you very much. I'll leave you with that very nice comment. And see you all again next time. All the best, everyone. Bye-bye.